got ARM Holdings, Meta, formerly Facebook, in case you don't recall. All right, Kevin Green joining me alongside Caroline Woods. So we've got numbers out already. I think we can basically roll with here. Qualcomm trading at $190. I think one of the most important chip makers in the market because it's connected to so much. Qualcomm chips find their way into so many applications, including, of course, iPhones too. Any insight on Apple important? Their outlook seems to be encouraging for the next quarter, their fourth. They're saying they'll generate revenue of $9.5 to $10.3 billion, which is a nice range compared to the estimate of 9.7. So their midpoint of 9.9 would be a nice beat versus the estimate. So that's good. That means Qualcomm jumps right out of the gate. And a guidance that is going to be helpful, I think, to a lot in the sector. Now, trailing revenues also beat $9.39 billion, estimate to 9.2. Earnings also ahead, $2.33. Street was looking for $2.24. Looks like triple beat there. Trailing, bottom, and top, and guidance. Caroline, did I get all that right?
You got it all. I was wondering if there's anything for me to add here. But yes, a beat on both the top and bottom line. As you said, guidance coming in better than expected, 245 to 265 for the bottom line. The street was looking for 245, so really at the low end of that range. In terms of revenues, $9.5 to $10.3 billion. The street was looking for $9.71 billion for revenue. So that's a good sign in terms of stock price performance as well. We're seeing a nice pop. I mean, the shares of Qualcomm ended more than 8% higher heading into this report. It had been a tough month of July, but really ended the month on an upbeat note. And it looks like it's going to be kicking off August on that upbeat note based on these numbers that I'm seeing. It's, certainly, I haven't seen anything in terms of that would make anyone upset about this report.
Yeah. Pretty good stuff. I think this is going to put a fresh bid into the market here so far after hours. We did just tick up a little bit, so we're already seeing kind of the opposite of this time yesterday, KG, when Microsoft dragged us down initially. Qualcomm popped right out of the gate.
Yeah, definitely. And the run up too is also remarkable to still see that there's room in the tank here to try to break through that 190 level. Now let's see if it's going to be able to hold. But this strength actually came in because of the smartphones, especially when you're looking at Android devices and the AI capabilities. And they do believe that not only just the demand strength that they're seeing just early on when it comes to the AI space, but the fact that these phones are also going to use more chips, and so that's going to help them out on the top line there. And when you're looking at the growth for shipments for global smartphones, that came in at around 6.5% for the quarter, once again beating the street's expectations. So that's the cherry on top. Outside of just the AI narrative that we've seen when it comes to servers and data centers, it seems like they have maybe seen a little bit of a bottom here, Oliver, when it comes to the smartphone business. And we've been waiting for one of these companies to at least tell us that the consumer might, this refresh cycle might be taking place. And this is pretty much saying that it is, at least on the Android side.
Yeah, that's a really important message. The only thing I will say is that among the really crucial big chip makers and tech stocks in general, I mean, Qualcomm is on the cheaper side, so I think the rally makes sense. It's probably one that had a little easier path to a bounce. Came into this trading forward PE of 18. I mean, like, that's like really cheap compared to a lot of the other stuff we spend so much time talking about. So I think it needed to get a bounce. It's got the bounce. The numbers are really good. So I think it's pretty straightforward to the point. A really good report. Gives us confidence about the refresh cycle. Let's talk Meta. Caroline, you want to get us going on Mark Zuckerberg's biz? Because the last pic I saw of him doing an interview, he was rocking a fresh new chain. Fresh new cut. He's got the style going right now. There's no way you do that if you're not about to deliver on the report. And it looks like they just did. This thing is ripping. 511. Holy smokes.
Yeah, shares were up about 2.5% heading into this report, but really adding to that right now following these results. Just going through here in terms of revenue outlook for Q3, 38.5 to $41 billion. Sorry, I'm just waiting for these things to come
that's
through,
it. Yeah, you got it. Yeah, that beats. the estimate, yeah.
Yeah, no. And then Q2 adjusted EPS of $5.16. Wow, that was an easy beat compared to what the street was expecting. Street was looking for $4.70 there, so easy beat there. In terms of sales, $39.07 billion. That also topped expectations of 20% growth of $38.34 billion. So beat on both top and bottom line, and the outlook also coming in better than expected. In terms of the family of apps revenue, which of course is the key advertising revenue. Sorry, there's so many headlines here. I'm just going through. Actually, Kevin, maybe you have that one.
Well, I'll just jump in real quick. Firstly, the trailing beat, solid, but not like huge. The revenue range definitely gives us a nice chunk above the expectations. They're losing, by the way, one thing that just stands out to me, they're losing $4.5 billion on the Reality Labs. I guess the market doesn't care though, KG.
No, I mean, because it's printing top line here, especially when you're looking at the advertising revenue. So that came in at 38.3 billion. Street was looking for 37.5 billion there. That is actually very solid, because if you looked at some of the channel checks from YouTube, maybe some softness there, or if you're looking at Netflix, another soft print. We kind of talked about Pinterest yesterday. So they really did bring the heat, and you are starting to see some traction when it comes to Reels and their Meta AI product offering as well. And they continue to talk about that. And they actually make a statement that it's going to be the most used AI assistant in the world by the end of this year. That is telling. Now, I will have to just caveat that Meta AI assistant is actually one of the most annoying things that I've had to deal with on Facebook, but it seems to be profitable, to say the least.
Is that like when somebody posts something and then it's like,
no,
would you like to know more about this or something?
No, it's like the new search feature. So instead of you like searching a friend, like, hey, I want to see my best friend's page or whatever, now you have to go to Meta AI Assistant. So basically they replaced all of their search with Meta AI Assistant, which is one of the reasons why it's going to be the most used this year, because it's one of the most used social media platforms. So kind of an interesting take there on how they actually integrated that to their overall platform. CapEx spend though. Let's talk about that, because that's also a big thing that everybody's looking at. They're looking at CapEx spend for 2024 between 37 billion and 40 billion. Street was looking for 37.14 billion. So they're still ramping up that CapEx spend. And I know we're talking about Meta, but you are seeing NVIDIA catching another bid. It actually did hit $119 off that news. So this correlation between CapEx spend by these major players continues to translate into these semiconductor names. And if this kind of virtuous cycle continues here, Oliver, it's really hard to fade that.
Yeah. All right. So I'm loading up the Meta AI right now, the Llama, which, okay, this is kind of what I thought, which is like they're all doing like same, like different versions of the same thing, though. That's what I have a little bit of trouble with, is that, you know, it's all like, you know, right now the suggested search is workout videos, 5 tips for glowing skin, help me get better sleep. All right, that one might apply to me. There's one that says how to win at hearts. Okay, don't play hearts, but that's okay. Like, there's kind of like, I get that like it's fun to do this stuff, Caroline, but it's like the exact same experience if I have ChatGPT, or if on my Google phone already, I press and hold the button on the side and it does it for me. So like, that's the only thing I'm still having some trouble with, is if it's basically like the search engine format. I feel like people already have their landing pages. I don't know, are people really going to Meta to like do all this? So I guess maybe.
I can't convince you otherwise, because like Kevin, I only use it by mistake when I am searching for something and it randomly appears, and then I realize I'm actually using it. So, so I certainly can't make the case there, but I mean, there is a lot of enthusiasm about these numbers, possibly including the fact that it's going to be the most used AI app in the world, or AI assistant, by the end of the year, according to Meta. I want to go back to the advertising revenue, because outside of AI, it's also obviously ad dollars are important for Meta. Finally found that number in this sea of numbers here. At Q2 advertising revenue of $32.33 billion. That came in higher than what analysts were looking for. Analysts were looking for around $37.7 billion. So, you know, there was some speculation from analysts that there would be a robust, Q2 number. Looks to be the case. We'll have to see what they have to say in terms of the election, potentially the Olympics, you know, a lot of positive catalysts on that front. In terms of CapEx, Kevin, I believe you said $37 to $40 billion. I do think that that's important to note that previously they had raised that guidance back in April from 30 to 37 billion to 35 to 40 billion. So it seems like they're boosting the low end of that range a little bit more. It doesn't seem to be weighing on shares. Obviously, CapEx has been, you know, kind of a hot topic this week and last week, obviously with Alphabet and then with Microsoft as well, but doesn't seem to be getting in the way. It seems like this was really a show me moment for Meta, that all of these, investments in AI are working, and investors seem to be rewarding it right now.
The stock is fading a little bit, but I gotta say, man, it feels like they really killed this report. Like just the amount of growth. Think about the companies we've been talking about. Think about how many discussions in these big winning stocks we've had where the trailing numbers are still showing either contraction or flat. And it's all about this assumption that there's going to be an uplift in the cycle. All these semiconductors, it's a turning point. That's why we're paying 40, 50 times earnings. Oh, Tesla's going to have robo AI anytime. That's why we're paying 100 times earnings. Meta, you're paying 24 times forward, and there's 20% growth on the overall top line. I mean, more than that. And every business they have is at least double-digit growth. I mean, it feels like they're kind of it feels like they're like the cream of the crop right now, KG, even if I do have doubts about the utility of their llama. It's a great report.
Yeah, well, it's a phenomenal report. But the problem that they have, and we still have the conference call, so we have to keep that in mind here. It's once again articulating the vision moving forward and giving definitive timelines as to when these products are going to have a really good ROI. And that's really where Mark Zuckerberg and their team failed last quarter, where they talked about all the great things that they want to do, but they couldn't say when they're going to have this done. And I think the street's kind of fed up with that. I mean, we saw that a little bit when it came to Google. Show me the money or give me a timeline. And if you don't hit your timeline or you don't have any money coming from these projects, they're going to take it out on the stock. So I think there's probably going to be a little bit of a cautionary tone when it comes to Meta here in the near term. And there's always a little bit of a risk for reversal when it comes to this name.
Okay. Yeah. All right. So it's still got to show the payoff, but at least they have the backing of momentum already in their core businesses with all that growth. That's kind of my point, is that for a lot of these companies, we're saying, all right, well, we hope it all pays off in the future, and then their trailing numbers are still really soft, and so the stocks are absurdly expensive. At least for Meta, you've got that grounding, you've got that kind of baseline of the core business doing well. But yeah, to your point, they're still spending a lot, and on the Reality Labs, losing $4.5 billion. So, all right, let's talk ARM here for a second. Given the designer role of ARM, a little bit different, but as far as chips go, one of the most expensive companies out there. So a higher bar, I think, here, Caroline, and it is getting hit a little bit in the aftermarket.
It is getting hit. It is a beat on both the top and bottom line, and the outlook is in line with estimates. So maybe there's just disappointment that it wasn't a beat and raise. In terms of the chip designer reporting Q1 adjusted EPS of 40 cents per share, that's a nickel higher than what Wall Street was expecting. Q1 revenue of $939 million, that's a 39% increase year over year. The expectation was for more like 907, so that's an easy beat there. When it comes to the fiscal second quarter, the current quarter, ARM is forecasting revenue in a range of $780 to $830 million. Expectations on Wall Street was for 804, so that's in line. And then in terms of Q2 adjusted EPS of 23 to 27 cents. Estimates on Wall Street were looking for 27 cents per share. Analysts on Wall Street looking for 27 cents per share. So potential to miss there. In terms of the full year outlook, looking for revenues of $3.8 to $4.1 billion. That's a miss, actually, if you take a look. No, not exactly. The Wall Street looking for $4 billion. So potential to be a slight miss if you look at the low end there. And then for full year adjusted EPS of $1.45 to $1.65. Analysts looking for $1.58, so that's in line there. So, a good solid beat on both the top and bottom line for Q1. But maybe some disappointment in this outlook here because we are seeing shares lower right now. Yeah.
We knew this was going to be the swingier one. That's how it is. ARM is always fun. It's more of a roller coaster than the other ones generally. What do you think of the report, Kevin?
Yeah, you're just seeing the cyclicality of their business, knowing that they just, for the most part, sell IP and have royalty revenue streams here. You can kind of have a hit or miss quarter every once in a while. I don't believe that this is an expense story. I haven't seen the actual expense numbers here, but when you're looking at their gross profits, I mean, they're sitting at around 80%, if I'm not mistaken, last quarter. So they don't really have a lot of operating expenses for their business. It's going to be more just being able to deliver on contracts within the quarter, and it just appears that they believe that might come up a little bit light for their Q2 number. But overall, it was actually pretty decent print outside of that guide. And if you just miss on one thing, the stock is gonna, stocks have been selling off because of that. So unfortunate.
Right. Yeah. Okay, so ARM getting a little hit here. Western Digital also getting a little bit hit. So it's kind of mixed, but Qualcomm and Meta, those are your heavy hitters, and they're rolling. So we've got good support here in the aftermarket. Appreciate you guys very much. Excellent work. Thank